Hey, Alpha fan, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over just the chop on the Bitcoin chart. We do see that Bitcoin just continues to go sideways after being saved by the good old Japanese bounce in the yen, right? Where the Ministry of Finance intervened in order to just plummet the dollar to hell and break its downtrend, a very strategic move on the part of the Japanese government. And that was done in conjunction with some signaling by some non voting Fed members with a very conflicted interest who were also suggesting that the Fed may need to pivot. And so there does seem to be some type of a coordinated action going on with some key players before the November elections coming up, and I'm not sure if this is just going to be political shenanigans or if it's actually going to play out on the charts in the coming, let's just say next week, maybe next 2 weeks. But guys, we do have kind of a deadline for that November election. November 8th is when the U.S. will be having those congressional elections, and of course, anything could happen between now and then. I am slightly biased to the upside just based upon political sentiment. I'm not biased on the upside based upon macro or technical indications. In fact, the macro is quite bad, but the political is quite good. So there is a conflict here, and you can't see that being borne out on the Bitcoin chart in just this sideways action where, similar to me and to many others, the price just doesn't know where to go, to be honest. So we will be reaching pretty much an apex to this probably in the coming week or so. Because of that politics season, there is a hard deadline on this, guys. We can't just go flat forever in the middle of all of that volatility politically and economically. Something will have to give. And so, guys, just let's take a look at our current downtrend. You can see that we're still, well below our downtrend. We have been rejected off of 19,250 as this 6 month long downtrend has continued to fulfill its promise of just rejecting us, right? Like rejecting us every single time. Just rejected, guys. So are we going to get rejected again? It's the question we're asking every single day. Are we going to break that structure that we have underneath us, which is essentially, this kind of support here around 18,500-ish. Of course, we have wicks all the way down to 18,150. And then on top of us, we have, this range high around 20,400. If you ignore this crazy spike over here, which maxed out around 22,850. And, we can suggest that we have some kind of a midline, some kind of mid-channel area around 19,500-ish, maybe slightly lower if we consider that this might be kind of a dual line here, as is often convenient to think about, where you do see these wicks kind of bumping their head right here. You do see this kind of turnaround right there. You see this wick, you see this kind of turnaround and bumping our head there again. And then perhaps even we could pull this one up if we're going to create a lower boundary like that. And so, of course, there's many ways to create these kind of midlines. These are just conceptual tools, so you can visualize how price action is going. And you can see, like, when we're in the top of this thing, we're just kind of chopping around. We lose it. Okay, the middle is in play, and then we hit the bottom, right? We had a breakout, but we got back in and we chopped basically around the top of it, broke down, chopped around basically the bottom of it, right? Just went back and forth in volatility, grabbed the middle, right? You guys can see that these lines do make sense, and so that basically what we're doing is just this, right? This is what we're doing. And the interesting thing is, right now we're bumping our head on that macro downtrend, and so that does lead us to the possibility that we could do that a couple times and then just break down. We could even do something like a little bit more extended, but it would be very easy for us to break down within the next week to week and a half, let's say. This area is fair game for just a huge, and catastrophic breakdown. On the other hand, if we get ahead of this mid channel, right, in a breakout, and if we can hold on top of it, then there is a good chance that we could have a play all the way up to 20,400, and flipping that, then maybe even 20,800, with perhaps some type of a stop in this area in the middle here around 21,500, maybe even a little bit of resistance right here around 21,000. And so, guys, these are the different levels that we're looking at as we look at these different levels, going all the way back. Right, in this kind of little epic that we've been having ever since June. Of course, that's just thinking a little too far ahead, and really, right now, we are just on the lookout for a possible breakout to this mid-channel area, or a possible rejection to our lows in the 18K area. It's highly unlikely that we just push sideways through this diagonal. There's either going to be excitement or there's going to be mass sell-off. I mean, it's just how markets usually work. Just to push sideways in the middle of a channel through a major macro downtrend, I mean, it's just not likely. So that's why we are on this kind of volatility alert here, right? And so we do have the possibility for some type of explosive move to occur. And that's just one way to visualize that. Hope that helps some of you. We also have this trend line that's just slightly off. Okay, it doesn't tag these areas here. Let me just put on the second boss again that we have to defeat. This one, of course, tagged here, and then it tagged the top here, and it's basically rejecting us here. But I would suggest that there's kind of a sneaky one, right, where perhaps these wicks aren't really as valid as we think. Maybe that's some type of exuberance in the market just from this shelf up here. And so if we do just not consider those weird kind of manipulation spikes, if we just consider this price action right before the fall, then you can see that we actually do have a trend which, if I just make that a little bit brighter, a trend which does actually tag through here and through here. And so that does give us just a little bit more room to play. In other words, I don't want you to be faked out just in case this is some type of a backup trend line, or if it is the real trend line and these areas right here were just exuberance. Then just understand that we do have a little bit of a possibility for an overhead all the way up to 19,600, and that could be kind of a fake out range, right, where we could end up just tagging that area and then getting knocked out. And if you go ahead and put on the more, kind of quote unquote, official trend line, right, that second boss there, then you can see what that might look like and why that could fool people. Because if we do have this macro downtrend here, and then we pop out like this, people might expect for the price to just, come back, retest the breakout, and then go forward. But in fact, what we've just looked at is that we might actually be under this semi-official, downtrend here. And so, in fact, there might not be a retest if it gets rejected at that line. It might just simply be being rejected on the actual trend line. And so it might not have been a breakout and a retest at all. Okay, so guys, guys, just understand that there are these kind of two competing concepts that may be at work right here, and never put anything past these sneaky market makers, okay, the powers that be, the algos to calculate things in a different way, okay, like these bots and of course the professional traders and all of this stuff, they just may try to get people trapped into some longs and then take it down. Or alternatively, they may try to get people trapped into some shorts and then take it long. Okay, so we could also do something like this, right? Just kind of freak people out, and then suddenly we have a just God candle that just brings us to spikes us to heaven. Okay, so just to be careful with all the volatility that's going on. Probably we can reach our range highs off of our volatility, but then we could also reach, down to hell, probably as low as, this kind of a $12,000 area I've been talking about, most likely with some stops along the way on 18,000, kind of 16,000, 15,000, 14,000, 12,000. You've just got a bunch of areas that we could play with based upon past price action, and we can get into that in more detail in a different episode. Right now, I'm just trying to show you structurally what we're looking at. And guys, let's see. We also have, if we do consider that alternative trend line, then we also have, in terms of price action and just structure, we do have a bit of a head and shoulders going on right here. Where it's kind of hard to see, but you can see that we do have this little thing going on here, thanks to that kind of bounce that we got off of that Japanese currency manipulation in the markets right when some Fed members were signaling the potential need for Fed pivot, and of course. The measured move of that is quite convenient in that it would actually take us up to this area right here. So yeah, I mean, just to be aware that could come at any time, right? It's not like it has to happen right at the neckline. It can happen when we break above the neckline, and this is all about price action. Sometimes these head and shoulders have little delayed moves, okay? But since this is a shorter time frame head and shoulders, most likely we would see it soon, perhaps off of this candle or something, okay, where it would pump like this. And that could also give us just enough oomph to actually break that downtrend as well. You can see it kind of sticks above there. And I was being rather conservative with the measurement. We could take it all the way down to the wick, right? And it would be just a pretty much a massive pump, to be honest, that would really break us out of that downtrend. And so, if this formation is valid, and I'm not saying it is, but if it's valid, then that's something that we could look at as we see some type of a buy support off of this wick here, and as we see this kind of putting in a higher low from this area. Of course, we also have a lower high, lower high. This could also be a lower high, and so we still have to be on the watch that this lower high may simply dump down into yet another lower low. Okay, so low, lower low, lower low, right? Like somewhere around here in 18K area. And that's the risk that we have going on. So I understand that these type of dueling, competing concepts in terms of our structure might have you scratching your head. But again, you don't have to be in every trade. Okay, like sometimes if you're just in the middle of the range, which essentially we are, then you don't have to take the play. The play to take, right? The play to take was when we had when we basically tagged support down here, when we tagged support down here, when we tagged support in this area, when we tagged support down here, then you can take that long play, right? And of course, you want to take some profit at this mid channel because you're not always guaranteed to make it all the way up. Sometimes you just get reflected, right? But you can play off that mid channel area many times. And also, if you're shorting, right, the area to short was here, and then you take your profit in the mid channel if you want to be conservative. Of course, if you just have time to wait, you could play to the bottom of the channel. I mean, back here, we didn't know that was the bottom, but once we established that and we broke back into this channel, then you could have played that here, right? You could have played that here to the downside. And if we pump up, then you could play it down like that again, right? Perhaps in some type of a retest of a breakout. Just while we're in the middle of the channel, it makes a lot less sense. It's far more risky to be playing in this area, right? Like you don't want to really play in the middle of the range, and that's where we are right now. So if you didn't take a position, right? If you didn't take a position here, and you didn't take a position here, and you didn't take a position here in terms of being long, or you didn't take a position here, or you didn't take a position here, then you're getting a little bit long in the tooth. You're getting higher up in your risk. So, like we knew what this green line represented. That's the buy line. That's why it's green, right? Like that's where you buy. This red line is where you sell because conservatively, we should meet some type of resistance in this area. And if we flip it, then good. But just not proven yet. Guys, that's it for structure and price action. Let's go ahead and just double check our volatility. I don't think anything's going to have changed. But yes, we do see that the 4-hour is now on extreme. That does suggest that the 4-hour is looking to put in some type of a play. We do see, of course, the 12-hour also at extreme lows. Let's see. And previously, the 12-hour and the 4-hour weren't on board. So now it looks like not only in addition to the daily, but we have the 12-hour and the 4-hour, and then the 2-day is just continuing to go nuts. Let's look at the 5-day. 5-day not there yet. Let's look at the 4-day. 4-day almost there. 3-day. 3-day has joined the party, guys. Let's go ahead and see the weekly. Probably nothing. Nothing. Guys, so it does look like that on these kind of like a middle time frames, this is the daily, that we do have just an incredible amount of volatility. A low volatility being put in, and that of course can just explode into a high volatility. That's where those explosive moves can come off of. So that's why we are just being very cautious right now about where our resistance is, where we're buying in, all of these things, what type of risk that we're taking, because we're not 100% sure. There's always some kind of uncertainty. There's always some type of statistical uncertainty and just vagueness in the charts. And so, guys, we are just looking out for that. Let's go ahead and look at our momentum. Of course, we do have the good old alpha momentum pools over here. Let's go ahead and drop down to a 4-hour just so we can get a little better resolution off of that. And you can see that based upon the momentum pool that I set for us on, I believe that was Friday night, that we did have to get over this pool area here, right? Kind of get on the deck of the pool, just kind of suntan, soak in some sun, get some vitamin D, and we would probably have a nice pump. We did that, right? We were under the pool when the day started, right? Because the previous day was pretty bearish, and so we were under the pool. There was a chance that we could have gotten stuck there and died, but it was just the beginning of the day. We had to see if we got that extra Mario life, if the billionaires put a couple extra quarters back in the good old trading video game machine and played this arcade we know as crypto trading. And sure enough, they did. Some billionaires put in their quarters. Of course, we got to swim in the alpha momentum pool. We didn't just swim around in it; we actually got on top of it. And so, in being on top of it, you do see this boom, guys, like just boom, right? Like we got a nice pump off of that because, of course, we did get on top of that momentum pool, and that just confirms bullishness. And so, of course, that went with my levels, and so we did get that bullishness for the day. Of course, the next day just took it all back, but as you can see, we did just to sit on top of that momentum pool, so there's no real reason to update it. we did end up just floating around in this 2 to 5 day projection area, and so there was no reason to update anything. This momentum pool was still valid. This 2 to 5 day projection was still valid, and we were just kind of chilling out above that the previous daily momentum pool in the 2 to 5 day projection. That's why I make the 2 to 5 day projection. It just takes a little bit of stress off of having to do this every single day and just updating by $100 or whatever. Okay, because you can see the next day's momentum pool. It's just like a couple $100 difference than the previous days. Whereas the 2 to 5 day projection was really suggesting what type of a wild swings we could expect to see while still maintaining some bullishness, and we were able to maintain that area. However, we did fall under that area as this new day began, and so that's why I'm updating with a new momentum pool because, guys, once we break one of these formations, we just have to double check to make sure we're all good, And it turns out we were not all good. In fact, we had just that, really deep retrace. Of course, this was probably just, grabbing this naked candle over here. Getting liquidity off of that, liquidating a few of these people who are just trading this range, or the bots, right? The little algos trading this range. And so some type of just liquidation of those guys where their stop losses were probably down here. And now it's pushing back into the momentum pool area. We are just swimming around in that, so if we can maintain this pool for the day, then good for us. We do need to get on top of that, not only for the daily, but also for the 2 to 5 day projection. And of course, that does go along with our second boss, and it does go along with that kind of deviation concept where we could have this, this slightly different trend above us, which just might be off a little bit, right? If we just ignore some type of wicks. But I'm going to go ahead and just use this as the official one, and so the unofficial one is just something that we need to consider now that we're so close to the edge. But if we do get above this, then we can start talking about the unofficial one in more detail. But you can see getting above this would constitute a breakout of this macro downtrend that we've been experiencing for the last 6 months. Of course, we already defeated the year-long downtrend, and so defeating the 6 months downtrend would be a serious feat. And that's why, guys, these momentum pools are no joke. It really is pointing us the way. It really is pointing out to us what we need to do. And again, guys, I'm measuring this by momentum. I'm not using price action for these pools. I'm using pure momentum calculations. Okay, so just understand that that's why I'm not using like a horizontal, resistance or whatnot. These are dynamic momentum pools. Okay, just some type of a secret sauce that I'm developing. And of course, the 2 to 5 day projection I put out here because we would need to hold this area to consider ourselves bullish. Obviously, you guys can understand why. We lose this area, we lose this area, probably we're going down, right? And so the momentum is pointing the way. Let's go ahead and just look at what signals I had given previously. And these were the signals that we were looking at a day or two ago. And of course, we did not capture the bullish area, and there just really hasn't been anything bullish. We just pretty much moving like $50, not 150 bucks, not really too much there, right? Not too big of a deal. Guys, we used to have days when we would move $5,000 in a single day, and it would be multiple days like that, right? For months that we would have $5,000 days up or down. And so these 100, these $50, these $150 days, I mean, they are just like scraps. They are just pathetic. And that's why a lot of people are leaving crypto, right? Not only do they see their portfolios going down, but they also see their potential gains as being really diminished and just not worth the risk of whatever 5%, 15%, whatever they're risking on their stop losses, right? So let's see here, guys. Yeah, we didn't get over my bullish even with a warning, right? Kind of like a front-running bullish kind of level. And so you do see that, Bitcoin stopped short of even like the slightly bullish. Okay. Like it didn't even get to bullish. It stopped at slightly bullish and it pressed into bearish. Okay, so not a good sign. Not a good sign. But still hanging on there. The fact is that we are holding the line above bearish. So far we aren't bearish. We are just holding the line on top of that. And again, guys, I make these understandings out of momentum. I do not make it out of support and resistance. So this is a totally different way of looking at the charts and a totally different insight. Okay, guys, we do need to update this. So let me go ahead and put on the different types of momentum that I measure. And let's just consider some things. First of all, just to reset our bearish bias, yes, we're underneath that box. Could we lose the 2-day? That would probably be pretty unfortunate. And let's just look at this. Here we have a 1-day, a couple 1-days down there, 2-day over here. And so, yeah, guys, I am going to just lift this up for my bearishness. My bearishness is now going to be at 19,166. Okay, so that's my bearish bias right there. Wow. Okay, I didn't notice that we had this 1B. This is just a multiple way of me measuring the 1-day. So actually, yeah, I am going to have to update that. This is a pretty tight, this is going to be a pretty tight day for us. So yeah, I think it's better because we're so close to this edge of our macro downtrend that we do just consider these things. And so, yeah, I'm going to leave that at 19,177. Let's see, our bullish but watch out. Probably, let's see, is this a 5-day also? Yeah, this is a 5-day and a 1-day. Probably I can move this one down here with no problem. And that is right on top of our boxes here, so that actually is good confluence with the momentum pools. And so this one I am moving down. Okay, so this is just a bullish, but a little bit of caution there. And then, let's see. I did update my EMAs to now consider the 5-day, not the weekly, just because I do believe that the 5-day can front run the weekly, and the 5-day has a lot of good volatility plays off of it. So I think it's because professional traders use 5 days, like 5 business days, and so the 5 days sometimes can be a good approach. And also the professional exchanges just, they're closed on the weekends, right? And so 5 days is a natural kind of time frame to be looking at. So I am going to be looking at the 5-day for my EMAs from now on. Previously, I was using weekly, so that's just a difference there. Uh, I'm trying to think whether or not we could front run this. And I do think that we could front run it by looking at our EMAs, but let me just quickly examine the bottom here for, yeah, 1B, we're going to lose there. 2-day, we're going to lose there. Oh, 1A, we're going to lose here. That's not good. Okay, oh no is actually going to be lifted up. Yep, I have to do that. Okay. That's just the daily. Uh, well, we already have a bearish bias there. I think I shouldn't be too shocking there. Just let me just move it up to this one. So effectively, we have a bearish bias right around here, and then it just gets extra bearish at the bottom of this 2 to 5 day, and then we have like a couple areas where it really starts to get intensely bearish around here, around a 19,100-ish, and then I just kind of give up over here around 18,900. So that's what I'm looking at for the bearish. For the bullish bias. I'm actually thinking about bringing this down. Uber bullish up here. Yeah, that makes sense still. Let's look at our EMAs really quick. Let's go ahead and turn on those EMAs. We are in a nice little squeeze here on the 4 hour. Let's just see if that can play out. That'd be interesting. Maybe all the way up to 250 to 300. Assuming it doesn't lose this area right now, because we do have this kind of diagonal kind of resistance going on there. Let's go to the daily. Daily, very much struggling to squeeze between the 4 and the 9 to try to get above that 9. It looks not great right now, guys. Just it looks not great. But yeah, if this thing could get a little pop above 19,000, let's say 230, then probably it can consider to put in a squeeze to the upside, but I would really need to see above 19,230, and I would really prefer above 19,260 to have any chance at it actually playing out. Otherwise, this just looks a little sideways right here. We just have to wait on that one. So the daily is not really looking that great, and then the weekly is just disgusting. Let's look at the 2 day. Yeah, 2 days losing the 4. So let's see, where would I actually want this to be at? Really, really in the middle there. Oh, we do have the 21 simple moving average all the way up here. Dang. Yeah, so 19,300. I would really like to see us at 19,300 for me to have confidence, just because that simple moving average is above our head, and so I need to be a little bit more above the halfway point for me to have a little bit more confidence. But yeah, I mean, just to front run some bullishness. Mm, yeah, you know what? I think we could get above that 4 also. Let's see, above the 2 and above the 4. Let's see, let's just put it at the 4. Okay, that's reasonable. All right, so we looked at structure, we looked at volatility, we looked at momentum, we looked at our EMAs, and now just for our signals, I just want to double check really quickly. Seven-day. Yeah, yeah. Okay. So yeah, so for our signals, I think this is pretty solid. And we do have to consider our momentum boxes down here, as well as this diagonal resistance that we're going to be facing in the coming day, where if we do lose this box, and definitely if we lose this 2 to 5 day projection, that probably we're going to be sent down, could be anywhere down to 18,900-ish. And then if we lose that area, I'm going to be significantly bearish. However, if we do pop above this area, because we're so close to this breakout level, I just would warn that it could be a fake out again. We have this kind of trend that could be just slightly off, just as an alternative projection from that 6 month kind of a downtrend. Right, it's just an alternative way of thinking about it. And so there could be some type of a fake out in this area before coming back down. And that's why I would say bullish, but watch out. However, if we do get above this 19,286, I am going to feel fairly confident that we're trying to push up. So, and we do have some range here. So let's go ahead and take a look at that. And so there you have it. There are your key levels to watch. 19,780 for uber bullish, 19,285 for bullish, 19,200 for bullish. But just be careful of fake outs and stuff. Just kind of front running bullish. And then for a bearish bias, 19,177 if we're underneath that. And then, oh no, right? Like, oh no, like if we get below 18,982, then I'm just going to be very bearish, right? So guys, from a momentum perspective, there are your key levels to watch. Let's see, going to just double check the DXY. You did see that the DXY did almost lose its macro uptrend here. And so coming into Monday, or whenever the hours are trading on Sunday night, then this is going to be a critical moment. Does the dollar continue to break down, or does it recoup some of its losses? And if the dollar does pump, then again, like it's not like a one-to-one movement with Bitcoin or anything like that. This volatility, if the volatility bounces, if the DXY bounces, then it just makes it harder for us to trade. However, if the DXY and if the dollar dump, then it makes it easier for us to trade. And that's the whole point of watching the DXY and the US dollar, just because everything is traded against the dollar, and then volatility in the stock market can make it very difficult for crypto to trade. Um, as the stock market faces some challenges. Its volatility is just too high right now. If we do just jump over to stocks briefly, we can see that we did end in a fairly bullish perspective. You do see my momentum zone that I had plotted out here for the S&P 500. I did suggest we had to reflect off of it and get ahead of it if we ever wanted to see 3,900 on the ES1, S&P 500 mini futures. And then, of course, for the NASDAQ, essentially the same story. If we want to see around, this could be multiple targets over here, but probably around 11,800 is possible. And then perhaps even higher for some of those. Of course, we have to deal with these resistances when we get there. But right now, we're kind of double topping on both of them. Let me go to a 4 hour. Right now, we're kind of double topping on both of them. You see this double top on NASDAQ. You see this double top on the S&P 500. And so if we do have a pullback, that's going to actually be bearish that it has a double top and that it can't break this previous resistance area, right? And so that could just be kind of like a fake out, like turnaround, and then continues all the way down. And so Monday, right, is also going to be a major day for stocks, not only for the dollar and the VIX to see if they break down, but also for the stock market to see if they can break above this previous high and get through this the chop of this resistance just to the left of it. And if it can basically get above my green box, then probably we're going to continue to pump. And what would that mean for Bitcoin? It would mean that Bitcoin is probably going to continue to pump as well as these markets take in some type of a fool's rally, some type of relief rally, and we can go from there. Right now, it is funny just how the weekend like got left off just really indecisively. Um, so just keep your eyes open. We can talk about that more on Monday, but just to be aware that not the stock market and not only the stock market, but also the US dollar and the VIX have also been left in this kind of limbo. And so that's why Bitcoin is also in kind of a limbo, even though it trades 24/7 hours. Because it has no idea what to do. And we do see that the professional exchange for Bitcoin is also is also literally right at resistance. This is where it closed off on Friday. Right, you can see the markets are closed. This is the professional exchange, and so when it reopens Sunday night, then we're going to be able to find out what it's going to do. But it's literally at resistance, and so it could dump or it could break through, and so the 24/7 exchanges are just trying to maintain that same price essentially, um, to synchronize with the professional exchanges, to synchronize with the dollar, to synchronize with the VIX, to synchronize with the stock market as this macro environment decides which direction to go. So, guys, that was your alpha for the day. Here are your key levels. Stay safe and happy trading.